Good morning and welcome to this weekly market update from MRC Markets. There's the 16th of July 2014. What we'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss, Aussie and Gold. Just going to review what happened in the markets last week and look ahead to this week. We normally do these videos on Monday, but I've had some technical difficulties with the sound on the computer, so but it's all working back now, so next week we'll do it from Monday again. We'll not make any trade calls or recommendations in this video. Do trade at your own risk. If you could please read our full disclaimer, which is on our website at www.mrcmarkets.com. that would be most appreciated. For any new followers out there, we have 3 moving averages in each of these charts. The red one is a 50 simple moving average, purple 100 and gold 200 simple moving average. Okay, let's quickly flip to the Forex calendar. Quite an interesting week, quite a lot of data out. So what do we have on Monday? We had Draghi speaking, so I actually need to change the time here, just to GMT. So on Monday we had Draghi speaking. That was the only headline sort of thing, and then overnight we had Aussie, Japan monetary policy statement, BOJ press conference, 9:30 on Monday with the UK CPI, which came in much better than expected. We had German ZEW economic sentiment came in much worse than expected. We had Bank of England Governor Carney speaking. We also had retail sales and the core, they both came in weaker than expected, and Fed Chairman Yellen testified as well. So yeah, that was yesterday. Also the other thing, we had overnight, we had New Zealand CPI quarter on quarter. That came in a touch lower than expected. So the market's been quite volatile with Draghi and Yellen as well, making the dollar and the euro chop around. Has been quite volatile, but there's some interesting moves definitely out there. In terms of what's going on for the rest of the week, so overnight we've had Chinese GDP. That came in a tad above expectation, and industrial production year on year as well came in slightly better than expected. What we have coming out today, 9:30, so I'm doing this video at 9:15, so 15 minutes. 9:30 we have so UK data, so the average earnings index. We have the claimant count change and the unemployment rate, so big piece of UK data there. At 1:30 from Canada, we have the manufacturing sales month on month. We have PPI at 3 PM. Some more Canadian data. So we've got their cash rate and then the rate statement, monetary policy report as well. We also have a Fed chairwoman Yellen testifying again. At 4:15 with the Bank of Canada press conference as well. So very interesting in terms of the US dollar and the Canadian dollar front today. Tomorrow we have more US data, so the building permits, you have the weekly jobless claims, and then the US Philadelphia Fed manufacturing index. And then to round off the week we have Canadian core CPI and the wholesale sales month on month. And to round off the week, the last bit of US data is preliminary University of Michigan consumer sentiment. So quite a bit of data out this week, quite a bit we've already had come out. So we should see some interesting moves definitely in the markets. Right, let's flip it to the charts. What's going on these charts? So we're on the Euro chart currently. This is the weekly. So a brief look at what's going on, what we've been speaking about. You can see Euro's starting to get quite heavy here. I mean, we did have a couple of weeks ago that weekly close. Well, we've had 2 weekly closes below this 50-week moving average. And in terms of the fibs, what have we been focusing on? We normally just look at the 50% and the 61.8% retracement on these charts, just to keep it nice and simple, as a sort of just look at one sort of retracement zone. But on this one, we have the 38.2 as the current support. So this is the fib from the 2013 low to the 2014 high uptrend. We start to get a retracement here. We had a brief bit of support there, a brief pop up, but it's struggling to get a key bounce. So that's why I personally just mainly focus on the 50% and 61.8 because you do tend to have stronger bounces, in my opinion. I mean, imagine it as sort of like a trampoline. The bigger the jump, the further you fall down, the bigger the sort of spring you tend to get off of those levels, and that's the way I see it. And this is a sort of prime example here in the 38.2. Not much retrace, slight bounce. It has held for a few weeks, but hasn't popped that high up. And it looks like it wants to come down to more healthier retracement levels. So the 50% could be an interesting one to keep an eye out for. You can see we have some previous resistance around here in 2013 as well, so previous resistance could act as new support there. I'm just going to delete this level now. I'll show you, so we do have some key round numbers as well to keep an eye out for. So in terms currently where we're sitting, 135.50s, that sort of coincides with that 38.2 level. So that's a key in terms of if you're sort of day trading and looking for the key round numbers, which do work out quite well. You've then got the 135 handle there as well, so that also coincides that support. And just above this 50%, you have the 134 marker as well. So in terms of round numbers, you pretty much got 4 50 pip increments there down towards the 50%, which could act as brief sort of support. So in terms of sort of scalping opportunities, there could be quite interesting ones to look out for. Let's flip it to the shorter term time frame. So what else has been going on? In fact, so we spoke about that 38.2 from the bullish side. I'm going to draw it back on here because this is the level where we've sort of come from it. So I've just flipped it to the daily. I've drawn the high of 2014, so this sort of recent swing low, with the low of the chart here on this zoomed in daily chart. And if you draw the 38.2% retracement level, then you can see that that's the key resistance where we've come out here, and it also coincided nicely with the 200-day moving average. You can see this fib move is starting to play out. It's starting to get heavy. It looks like it wants to grind down towards the 0% line, which stands at 1.3502. If you're looking at sort of pure sort of support and resistance, you can also see we haven't had a daily candle close for some time at this 1.3533s there. So do keep an eye out on that level as well. I thought a lot of people were looking at that level as a key sort of support, which is just above the 135 handle. What happened last week in terms of another fib move we spoke about was this smaller move there. So that swing low to that swing high. I should take off that 38.2 again. And you can see we had some brief support here at the 61.8% retracement, a nice sort of daily reversal candle there, some lovely intraday action at that level. And in a couple of days we had a nice pop up there. It then came back down towards this 50%, tried acting as support again, got a brief pop up, but you can see yesterday's daily candle really just brought it down, and we're now well below the 61.8, and this fib is pretty much done and dusted. I think the last sort of support you can see is that 135.30s we just spoke about, and then of course you've got the 135 handle as well. So that's what's going on Euro. They're pretty much the setups to keep an eye out for. I think those bigger sort of fibs, bigger levels. But definitely in terms of, well, over the next couple of days or today for certain, this 135.30 is the big level, and then you've got the 135 handle as well. Let's flip it to cable. What's going on? It's still in grind higher mode, ripping higher and higher. In terms of the big sort of resistance that we've been speaking about, you have to flip to the monthly here in terms of the fib moves, and this 50% here comes at one spot 73.31. So we're still a long way away from that, about pretty much 180, 190 pips, but it's good to keep it in mind because it looks like it wants to keep on grinding higher towards that level. So if you flip it back to the weekly, in terms of last week's weekly candle, some say that's some sort of reversal, but it has got a bit of lower wick on that, so the buyers are still coming in, still want to prop this higher, and that's sort of evident with this current weekly candle. You can see with price came back down, buyers have coming in, and they're currently keeping it above the opening price of the week. So it's just grinded higher and higher. Haven't had any sort of healthy retracement. I mean, you'd expect it at these sort of high levels to have some sort of healthy retracement, but it's still in grind higher mode. I mean, it tried there, remember that weekly candle, then you got a few weeks of retracement, but you can see those always lower wicks on those candles, so the buyers were still interested in buying at that price, and you can see it's just continued to grind higher. In terms of the shorter term charts, so in terms of any fibs, nothing really is sticking out here. Oops. Yeah, nothing really is sort of sticking out. I mean, of course, we've had these fib moves here, so remember that dip there, that was lovely. And then if you extended your high, you then had that move there. So if we do get any sort of retracement, then that's definitely the low that I'll personally be keeping an eye out for. I thought a lot of other people would be looking out for as well. We thought you were going to get it there, so last week we started to have a bit of a retrace, but you can see yesterday's daily candle is such a the buyers came back in and trying to push it high, and we actually broke those highs, but we did close above. So if we do get a retracement, which could happen, you never know, then that's personally the low that I'd use. I mean, some people, yeah, might be looking at these sort of smaller moves there, and technically they are sort of holding. I mean, that one there is actually to the pip, so that's quite an interesting one. But in terms of this sort of daily chart, in terms of a healthy retracement, that's the one that I personally be looking at for. I think a lot of people will be looking at as well. It also coincides with previous support there as well, so that 50% comes in at one spot, 69.42s. And in terms of key sort of round numbers that that were sort of floating around at the minute, or are quite near, you got 170.50s here. So if you think the market is just going to keep on grinding higher, then on smaller retracements, and you've got the 170.50s there, and then of course 171 is a key marker to keep an eye out for there. And if you flip it to the shorter term time frames, you can see it's that 4 hour. We get some lovely support around there. Then in fact it did come below that, but you can see if you look to the left here, this key sort of spike high here, so previous resistance now acting as new support, and you can see that's where we came off of there, nice bit of support, and that popped up. It also did coincide with that this sort of fib here, which I just drew as well. So bam, there you go, that move there. Actually no, sorry, it would have been that high there, sorry. But there you go, you can still see came off nicely off the 50% there, but not a clear sort of swing low. I mean, it did react, so there's nothing wrong with it, but personally prefer to look at the clearer swing lows there. And that's pretty much it, to be honest with you, on cable. I mean, you of course got the 172s if we pop up. We did sort of got front run to that level, but you can see where we sort of spiked here. This candle here was just purely off of recent resistance there. You can see multiple spikes at that level, and you can get it popped up yesterday. Tested as one spot 71.65s. Had that reversal, and then you got a bit of retrace here. But you can even see here this previous 4 hour candle was quite a bullish one. It looks like it just wants to grind higher. The 9:30 news will be interesting, which is coming out in a few minutes, so keep an eye on that. Dollar Swiss on the weekly. What have we been speaking about? This fib move here, so from the low of the year to the high. Quite a small one on this weekly, but you can see a couple of weeks ago we had that weekly reversal candle. Lovely lower wick on that, and you can see last week just a standard sort of continuation pattern. Yes, it was a red candle, but the buyers are still coming in on that candle. You can see that lower wick as well, and then surprise, surprise, this week there's a bit more of a lower wick. Buyers coming in and pushing it up higher, so it looks like we're going to get a test of this 50-week moving average here on dollar Swiss. And the key resistance in terms of a key round number on this weekly chart, it's all at the 0.90 handle. You can see we haven't had a weekly close above that for some time, so keep an eye out on that. In terms of the daily, similar sort of thing, pretty much the same move. I wouldn't personally, I mean, some people are going to get a sort of fib in this move here, but it looks like we're pretty much above that now. I mean, yeah, check out the daily candle today. If we do get some dollar weakness, then it could completely reverse. But currently, it looks like it just wants to grind higher and take out this sort of 0% line, or definitely the 0.90 handle is. So wouldn't be surprised to see a test of that. We're actually only about 30 pips away from that. That's pretty much it on dollar Swiss. So, well, the other thing to talk about is on the 4 hour chart, this smaller move there, which followed with the weekly bias really for the last sort of couple of weeks. This is 4-hour move. You can actually see it on the daily. There's a bit clearer. So I'm just to zoom in there. So uptrend, retrace down. You can see 3 daily piercings of the 50%. 3 closes at from those 3 piercings, you had closes above the 200-day moving average as well. And you can see yesterday's daily candle grinded higher, and it took out that 0% line. So classic example of fib moves on the smaller term time frames there. Aussie on the weekly chart, what's going on? In terms of fib moves, nothing major. I mean, that's the one to personally look out for, I think. That's the fib of 2013 to the low of 2014. The 50% comes in at 0.9620s. But we are hovering around at the minute at the 0.9450 level. That's the key resistance there. You can see, I'm just going to zoom in now a bit on this chart, so you can see it a bit clearer there. Key resistance is holding. A couple of weeks ago we had a sort of weekly reversal candle. Last week, bit of upper wick as well, so it looks like it could grind lower here towards this sort of 50-week moving average. But if you do flip it to the shorter term time frames, there is an interesting move holding out. It's not the greatest of moves, but remember, it's this low here which has been an interesting low in terms of fibbing moves, because first of all we had this fib here which played out. So nice uptrend, retracement down to the 50%, and then rotated higher, took out the 0%. So taking that same low, you've then got this move here, and you can see we've had a couple of closes below, but this 50-day moving average has been acting as nice support. I think I actually tweeted this chart yesterday, because yesterday's daily candle tested this 50%, but you can see we did sort of slide lower, took out stops, and sort of coincided with this 100-day moving average as well. So keeping an eye on the 50-day moving average, keeping an eye on the daily closes. If we do get closed above, then I think we should sort of rotate higher towards the 0.9050 again, but it does have to be a bullish, definitely a bullish close. I think any sort of, if we continue to have these red candles, and we're just going to keep them grinding lower, I think, to more sort of healthier retracement levels, which will coincide here back on this weekly chart to that sort of move there. So, which it does look like it is looking heavy on this weekly, but you never know. Gold on the daily is starting to get interesting. I mean, what have we been speaking about last sort of few weeks? It's been about that fib move there, but of course it wasn't really acting that technical. So the other one to keep an eye out for was the fib on the other side, which was this move here, and we actually got a test of it yesterday and a close above. Not really a bullish close above, and in fact 100-day we actually closed, I think, just below the 100-day moving average, so not exactly a major sort of bullish reversal, but nevertheless we did get a test, nice sort of scalping opportunity there, which I'm sure a lot of people may have taken. And you can see we're starting to get brief bounces. So an interesting level, definitely a key fib there. Lovely uptrend, then retracement towards the downside. And then you can see a nice reaction to the pip. And also moving average confluence there, you've got the 50-day moving average as well. In terms of key levels, key round numbers to keep an eye out for, it's all about 1300. I'm just going to flip it to a smaller time frame there, so you can see we actually sort of got front run to that level yesterday. And if you can also on this 4-hour chart, the other thing to keep it which has been interesting, is 200 SMA as well. That also acted as nice support. So lovely confluence there of moving averages on multiple time frames here. But for me, I think, well, for everyone really, it's all about this this fib move here. It's the key level, this 50%, 1292 spot 50s. And that 1300. If we're going to get a nice rotation towards the upside, then we need to start seeing some solid closes above that 1300 marker. And if we do get a brief bounce up, then I reckon a lot of people will be keeping an eye on this fib move here. So it's the counter move of that fib is that one there, and the 50% comes at 1318s there. So keep an eye on that one. Okay, then that's all for today. I hope you found that video useful. If there's any other pairs that you want me to take a look at next week, then feel free to comment under the YouTube channel or send us a tweet to our Twitter feed, which is at MRC_markets. Hope you have a great rest of the week trading, and I'll catch you next Monday. Thanks for watching.